No, Sarah, thanks for having me on. I think it is kind of interesting to look at. At the beginning of last week, we did a bunch of analysis, and some of the best companies that we cover, you mentioned a few, Nvidia, AMD, Marvell, Monolithic Power, those groups since Thanksgiving down about 30%, while the earnings estimates for the out year went up about 10. So we had basically the top companies in growth semis cut in half from a valuation perspective. And I think that's part of what we're seeing now is that we had some events from Nvidia earlier in the week to talk about their long-term growth profile. I think investors realizing it. The long-term growth stories haven't really been dented here, but the valuation certainly had been.
Nvidia, with the move today up more than 9%, is that you think it's a delayed reaction to the investor day? What did we learn? What was the big takeaway?
Yeah, I think the big three takeaways that our team had from the investor day were, one, the really strong hardware position Nvidia's in. They launched their new Hopper GPU, which is important for all across their businesses, particularly data center. They gave us some hints at expanding not just to GPUs, but into the CPU market with ARM-based CPUs, to DPUs, which come from their Mellanox acquisition, and offering a much, much broader and more diverse set of services to their data center customers. And the biggest point from the analyst day, they laid out $1 trillion TAM, which take with a grain of salt, but
total addressable market.
A third of it was software. And investors really wanted to hear the early innings of their software strategy that they can monetize over the coming decades across services into the car, in their drive platform, the Omniverse into their simulation platform, a bunch of enterprise software features, and GeForce Now for over-the-air streaming gaming services. That's a couple $100 million in revenue for Nvidia today. We forecasted out to some really strong growth, maybe up to 20% of the company, $30 billion business at the end of the decade. So we got some breadcrumbs to start modeling a software business that can be margin accretive and much more sustainable long-term for Nvidia that's leading in the hardware AI space today.
So given the fact that it's getting into software and it's becoming more software-like, what kind of valuation does it deserve? It's trading about 50 times next year's earnings, which is higher than some of the other competitors like an AMD, which have also done well. What sort of premium valuation does Nvidia deserve, and is it your favorite pick?
It is our top pick as of last week. I mean, the stock's moved 30% in, I think, 8 trading days. So we're kind of always reevaluating this stuff. But yeah, it is our top pick currently. AMD and Monolithic Power are the other two in our list of 3. And I think we modeled business out to 25% earnings growth, give or take, through the end of the decade, driven by all of their businesses. And I think the market's assigning the valuation of a company that can take earnings up from $5.50 or so today towards $30 in earnings by the end of the decade, and pricing in more of a compounder than something just on near-term earnings power. But there's going to be a material premium assigned to the company, and I think they've earned it.